All right, well, thank you for that great introduction, Miss Kama. Okay, let me share my screen and then make sure I'm doing it the right way. I think you guys can see the whole thing. So I hope everyone is having an amazing day. As Kama so kindly introduced me, my name is Marisa Fletcher, and I am going to be the educator for today. And I really wish some of you guys could come off camera. I see a whole lot of black screens. It'd just be so awesome if anyone is so inclined to please come off camera. Thank you, Veronica. I appreciate that. Just so I can see your faces. If you're driving, it's okay. I just want to know that I'm talking to somebody. It makes this so much easier and so much more interactive. Okay, so anyway, the topic of my education today is called the business of real estate, something that I hear Ms. Kama talk about all the time, running our business like a business. I'm going to talk about credit, I'm going to talk about capital, and I'm going to talk about growth. And I'm going to do it in a way where I can answer some of the unanswered questions that we get a lot. First off, let me just give you guys a quick agenda, just so that I stay on track. All right, so agenda. You're going to meet the speaker, just know a little bit about me. We're going to go over the 3 C's of business funding, credit, ideal credit profile. You guys can read. For those of you that are not driving, we've got 8 things that we're going to be covering today, and I'm just going to jump right in. All right, so let's get started. So, hi guys, I'm Marisa Fletcher. I am in real estate and have been in real estate for over 20 plus years with my husband, DeMarco. So we all speak the same language. I am a realtist and I've been a realtist for quite some time. But for the first time, I'm stepping up into leadership. And as Kama mentioned, I'm one of the regional VPs for 3 of our Southern Networks chapters. But when it comes to real estate, I am, my husband and I, we used to own a big box brokerage for 10 years. We sold that in 2020. And now we partnered with Coldwell Banker for our real estate business. At the same time in 2020, we also added a solar division to our business. And then also credit repair was added in 2023. Why? Because it was needed. All the clients that come to us, they need one of 2 things. They either need money or they need credit. Okay, and money we can help with. We all know as realtors where to go find the money, where the DPA down payment programs are. But when it came to credit, there's a problem, right? It's not a very well regulated industry, and clients a lot of times just get burnt in that process. So I decided at that time, hey, why don't I do it myself? Add a credit repair division. I got fully credit approved with the Department of Justice. If you check the credit repair organization out, we're fully licensed and listed there, and we've added credit repair. Now, in adding credit repair 3 years ago, I found out a lot of things. Number one, there's some credit. Obviously, we don't learn credit in school, right? Now, and I'll even go on. Before I go there, I'll even go on. Another thing happened in 2023. I adopted my son, Elijah. You see him here. So in 2023, I adopted him. Obviously, I had some downtime as a new mom, sort of new mom. That's a long story, but new mom, comma, don't laugh. And so I said, okay, during this time, how can I add more value? How can I make this real estate work? How can I make everything tie in? NextStep Credit Solutions was born. Okay. So since 2023, I get questions all the time about personal credit, business credit, and there's some very basic and fundamental questions. And so like Kama said, I came up with this presentation so I can help educate not just us as realtors, but also our clients, right? Because these credit things that they don't teach us in school, these are the things that are going to help us situate ourselves so that they can buy more houses, buy more property, and have more opportunity. Running a Remax for 10 years, there was cash flow challenges throughout those years. Some years are really good, some years are really bad. By me building credit and understanding credit and the foundations of credit, it was able to help in those areas. And again, as real estate agents, we can set ourselves up so that we can thrive even when the industry is not doing its best, right? As we wait for it to come back around. So a little bit more about me, guys. I'm from Compton, California. I got a couple of degrees, a bachelor's and a master's, one in business management, one in public administration. But what I learned was none of that stuff, none of those degrees, none of that school, none of that education taught me anything about credit. All I knew about credit was when I first went to college, how you walk down what I call credit row. And they got teddy bears and t-shirts and bags and book bags. And hey, if you sign up for this credit card, we'll give you this item. right? That's the most that they taught about credit. Fortunately, that's going to be changing here in the future. There's some laws and acts that are going to be changing where credit has to be taught in high school. I'm so excited for that, at least a credit course, so people have an idea. So anyway, again, all that schooling, all that stuff taught me nothing about credit, but guess what? My husband and I built our business. We've been in real estate over 20 years, 25 plus years. We built our real estate. We built our solar careers. We built our businesses. We purchased investment properties using credit and using the foundations that I'm going to be teaching here. And a lot of it included business credit. Okay. All right. So you guys got the gist of me. How long did that take? Okay. All right. Okay, so the first thing we're going to cover are the three, what I call the 3 C's of funding, okay? One of the questions I always get is about business credit. How do I get started? How do I get my foot in the door? And so I always say that, as we all know, as we as realtors know, there's 3 C's of funding: cash, credit, or collateral. If any lenders are on the call, you know the same thing: cash, credit, or collateral. If you don't have one, you'll have to rely on the others. And if you don't have two, you'll have to heavily rely on the others. Okay, why does that matter in our business? Well, a lot of times we don't have cash, right, because of the cash flow situations or scenarios, and we don't have collateral, but that's where our credit comes in. If we can build a great credit profile, and not just a great credit score, but a great credit profile, that's where it starts to get business funding. So the key starts with the personal credit and building that profile, and then knowing what that profile is in order to get the business funding. Okay, so I always want to start there, and I always want to talk about that. A lot of times we got to work on that personal side before we can even get to the business side, but a lot of these companies won't tell you that. Okay, they just tell you come in the door, they get you in, and then they try to hook you up on credit repair, or they try to hook you on a product. Okay, but you got to start on the personal side. And so I always briefly go into what is a credit score, right? And why does it matter? What I've learned in teaching credit and teaching courses in education and taking polls is that not everybody knows this. And guess what? Our clients don't know this. Okay, even if we know it, our clients don't know it. And sometimes knowing these little things, these little hacks, is the difference from your client having a 620 score to a 680 score. The difference between your client qualifying for this product versus that product, and the difference between you having a client to be able to take out there and help purchase a home. Okay, and I learned this by getting into credit and learning what those little hacks were and those little secrets. So what is a credit score? It is our financial GPA. It is an evaluation of the risk for lenders and institutions. My lenders, my realtors, we know this, right? A lot of things that a lot of our clients may not know is that your FICO score is broken up into 5 components, and those components combine your score. This is the big thing that I learned. 35% and 30% make up 65% of our overall credit score. You can get up to an 850 credit score. We're going to talk about that in a second. But 65% of that credit score is based on 2 categories: payment history and credit utilization. Payment history and credit utilization. What does that mean? You make a late payment, it's going to affect your score. A lot of us know that as realtors. You're trying to buy a house, you got a late payment, it's going to drag that score down. Depending on how high your score is, it can be almost 90 points. 50 to 90 points for one late payment. Even if you've been perfect for 5 years and you get one late payment. I've found a lot of our clients don't know that. I've heard clients say, well, it's just a late payment. You know, I'll just pay it later. It's only $400. I'll just pay it later, not realizing that by not paying that $400, that late payment is going to deem them way harder when it comes time for them to qualify to buy a house. Okay, so late payments, 35% of our overall score. Credit utilization is another big one. That's for our business owners. I found that a lot of my business owners don't know that 30% of our score is based on credit utilization, right? So what does that mean? You got $10,000 worth of available credit. I got an Amex card for $10,000, and I'm using $9,500 of that $10,000. I am 95% maxed out on my credit utilization. I'm probably losing 50 points or more depending on my overall profile just on that one factor alone. Just on that one factor. Okay, a lot of our clients don't know that. For example, I get credit repair clients and they're stuck in the low sixes, and they think they have bad credit, and they want to get credit repair. And then I look at their credit profile. They don't have no lates. I'm sorry, this one client I'm thinking of, he had one late, but it was 6 years ago. Okay, doesn't even count anymore, really. He had one late 6 years ago, no collections, no charge-offs, no nothing, but his score is in the 620s. Why is my score that way? He didn't know his utilization was maxed out. He had one card that was $5,000, and he owed $4,700 on that $5,000. Okay? The only advice I could really give him, because he was not a credit repair candidate, right? Because he didn't have a bad credit profile. The only advice I can give him is throw a lump sum of payment. Can you get a lump sum payment thrown over to that and pay that down? Or can you get a personal loan that doesn't show up on your credit to pay that down? You do that, your score is going to jump 50, 60 points, and you're going to be in the range that you need to be to buy a house. Okay, so I always like to talk about those two things alone, because that's what I find the most that are affecting people that they don't realize, mainly our clients and or us, right? Length of history, new credit, credit mix are the other three categories. The score is not the only deciding factor, though, when it comes to business credit. So now we're going to flip over and we're going to talk about business credit, right? When it comes to business credit, they're looking at your score. It is a factor, but they're also looking at your overall profile, okay? Now, why as business owners should it matter that we have business credit? As a real estate professional, I've always been set up as a business. I've always had an S corp from over 20 years ago. Once I started making $100,000, let's put it that way. Once I started making six figures, I was set up, which was like year 2, I was set up as a business. Why? Because I knew that building that business was going to help me in the long run, right? Here are some of the differences. When we do things just based on our personal credit, of course, that's tied to your social and it's tied to your name. Of course, it affects your mortgage and auto, personal loans. It affects all that because they're looking at all the credit you have, all the debt that you're carrying. There's 3 bureaus that we answer to when it comes to personal credit: Experian, Equifax, TransUnion. Okay, not everybody knows that. FICO scores start as low as 300 and as high as 850. 850 is darn near perfect. 850 is longevity, long time, being perfect, for a long time, right? The beautiful thing about FICO scores, though, is if you know how to work the system and play the credit game, you can start at a 400. I get clients that are at a 400, and I'm like, I like these because I know that I can get them into the 6s in a little bit of time, right? Just in a couple of months based on how we structure the credit. So credit can always be manipulated and maneuvered based on your plan. But errors can haunt you for 7 years. You make a late payment, it can show up for 7 years. It haunts us with on the personal side when we're trying to finance a home or refinance. It haunts us for the first 12 months, 24 months, whichever one that is. But when it comes to business credit, it's for 7 years. Because most business lenders are looking for a clean profile going all the way back, some only 5, a lot 7 years. Okay, but that's on the personal side. When we get to the business side, though, that's when credit starts being tied to your EIN, employee identification number, right? Not your social. That affects your business loans, your vendor terms, and your leases, right? There's 3 bureaus on the business side as well. A lot of people don't know this. Dun & Bradstreet is one of them. We know them. But there's also Experian Business and Equifax Business. You get a Paydex score when it comes to business credit from 0 to 100. The higher the score, the less risk you are, the more likely you are to get that business loan or that business product. And business credit can be built from scratch in 6 to 12 months. Okay, it's not something you have to buy into. You don't need to buy onto a trade line. You don't need to do all these fancy maneuvers, because basically from where we're speaking and from the type of businesses we have, this is the way it's going to be built. Now, if we were Pepsi or some other big company or, something like that, it'll be a whole different story. But we're small businesses. This is how we build that credit, right? Most high credit professionals never build business credit, and there's a missed opportunity in not building business credit. And we're going to talk about that in a later slide. All right. So now that I've gone over the differences in personal credit, business credit, what those look like, let's talk about the ideal business credit profile. Because when it comes to getting business funding and building business credit, they're looking at the overall profile, not just the score. All right, so let me give you some things that will be ideal. This is in a perfect world, everything ideal, right? Doesn't mean that if you don't hit all these factors, you can't get business funding. It just means this is perfect, and the closer to that, the more likely you are to get yeses, and the more money you can get funded for. 700 pluses or 720 pluses. Higher the score, the better. Most of them look for 100% payment history for 7 years. No late payments, no collections, no charge-offs for 7 years. That's what gets us a lot when it comes to business funding or business credit. Some might limit it to 5, but now that the economy is rough and shaky again, they're increasing what they're looking at. 0 to 3 hard inquiries within the last 12 months. For a clean business profile. You can't have 12 inquiries, 15 inquiries, because lenders look at that as a red flag when it comes to business credit. 2+ years of credit age minimum. 5 years is more ideal. The longer the credit age, the more stable you are as a business, right? So you start your business today, you start building your credit profile today, you're still in business 15 years later, 20 years later, that's all business credit that you built. Just like on the individual side, you're building it for your business. So they look for 2 years minimum credit age. 5 years is more ideal. That's more what lenders are looking for now with the changes in the market. They want you to have 5 or more open and active primary credit cards reporting. Now they're talking about to your personal credit profile, okay? They want to see that you can use credit, that you have it and that you can use it, right? They don't want you to have a bunch of cards. I have a client that had like 25 cards and she just got like 3 of them closed because she doesn't use them. They're not active. Okay, most lenders after 18 months, depending on what the lender and their time frame, they'll start closing cards that they consider inactive. They give them to you for you to use them in hopes that they can catch you and get the interest, which is how they stay in business, right? So you want to have 5 or more of those active cards. You can't have a baby file on the personal side and then want a mature adult file on the business side. Okay, so the more you build up your personal side, the easier it is to get the business funding, but business funding is 3 times what you can get on the personal side. Okay, $10,000 or more in personal credit. Again, going back to, you can't have a baby file over here, right? Where you have, 2 or 3 credit cards and a maximum amount is $500. And now we want to come over to Chase and we want a $10,000 zero business line card. That's not going to work. Okay, so $10,000 or more in personal credit is ideal. And then you need to have a good mix of credit, just like when you go to buy a house. I want to see a good mix of credit. If you got an auto loan on there, a mortgage, student loans, things like that, and they're in good standing and they fit all these other categories, you're a good risk for them. Okay, so this is like at a glance a FICO profile that will look ideal to a lender, right? They have 26 open accounts, 4 years and 1 month average age. Their oldest account though is 16 years old. That means I've got some old stuff and then they've got new stuff that's dragging that average account age down. But their overall credit usage is 8%, right? They've got a credit card and a credit line of $17,000, okay, in the 5 figures somewhere that they manage, and very low usage. That means they have a lot available and they're only using a little bit at a time, which is what lenders like to see. They've also got a loan, they've got a mortgage there, okay? So looking at this would be an ideal business profile. This person can go and start applying for business credit and get most of the cards that they're looking for in higher limits and higher amounts. Okay? Now, not all of us are in this category. This is where we strive to be and we're working to get, right? As we do our business and as life happens. So let's look at some other profiles and see if we can spot some things that might be challenging. Now, this is the part of the meeting where it's usually interactive. And I'm saying, hey, raise your hand or yell out. What can you see on here that might make this not an ideal profile? Areas that need to be worked on. And let's see, I see a couple faces, but first of all, the credit usage is way too high. It's maxed out. Very, very common, especially you're running a business and you need to use that for cash flow purposes, right? You got a flip closing. I see this often with investors. They got a flip closing, so they use their credit cards and max those cards out while they're waiting on that flip to close. And that flip closes, they're getting their 120 grand and they'll just pay it off, right? But they're maxed out, so they can't get any business funding. They can't get any business credit. What else is on here? The scores, obviously, not as ideal. Closer to 7s, the better. Over 720, the better. I've got some open accounts over here. This account over here, this has got collections on it. This is going to go nowhere. Got to get those collections off. Okay, so that one's not ideal at all. This one looks a little bit better. 15 open accounts, but they're carrying just a lot of debt and they're actually over credit usage, right? So this is risky to a lender, and these profiles are very weak for lenders, I call them, and they're not going to be eligible for those 0% funding that we start with, that we look for. Those $50,000, 0% funding for 18 months, those Chase cards, those Amex cards that we all start with when it comes to funding. Okay, here's some other examples, right? These look a little bit better, but this is kind of a trick question. What are some of the good and bad factors of these profiles, right? This looks a little better. This is also something that's very typical. You got people with high scores in the 7s. They're like, we're in the sevens, we're good. They got low usage. They don't max out their cards. This one is better than that one. Get it under 10%, great. Sweet spot is between 1% and 9%. We tell consumers 30% because that's more doable. But sweet spot is 1% and 9%. But what's not as great about these cards, they don't have a lot of, these are baby fouls. They don't have a lot of current credit lines. They don't do a lot of activity. They're better profiles, but they're still thin. Okay, the lender doesn't know that they can take on this client, what type of risk they're really going to be, because they don't show any prior history in the past. They're baby files. Okay, so those are the kind of things that we come up against when it comes to business funding, right? And actually getting that funding. Again, the cleaner our personal side is, that's going to affect what we can get on the business side. Okay, so what do you have to actually do in order to get business funding? Right? This is how, when you watch those videos or those YouTube commercials, this is what they're looking for. Most of the time you have to start with credit repair. Okay, so this is where credit repair comes in, because if you have a collection, if you have a charge off, if you have a late payment that's 6 years old, it can prevent you from getting some of the funding that you're looking for. If not some of it, most of it, right? Or now it prevents you from getting the zero down funding. Now you're going for those merchant accounts or those vendor accounts, and they've got really high terms, really high rates. You got to pay them back every week, that kind of thing. Okay, which is like a last resort. So usually it starts with credit repair. Secondly, I always reduce utilization. If you're not a baby foul and you've got high accounts and they've got balances on them, now our goal is to get those down. Chuck money at them to get those down. You don't need credit repair. You just need a strategy to get that down so that your score shoots up and you can take advantage of it. Okay. I remember when I learned this, when I really realized the impact of credit utilization. I was already in business, been in business 3 decades now. So I've been a business owner, and it was buying a car. And I remember always thinking, okay, when it's time for me to buy a car, I got to have a couple of really big months so that I can pay all my credit off so that my score goes into the sevens so that I can get a really good rate on my car. Okay. I literally just did this in 2022. Okay, paid everything off, scores in the sevens. Now I got a 1%, 2% rate or whatever it is on this car. But that's the utilization hack in the utilization game that you use to your advantage. So anyway, reduce utilization. now I can use my cards again, right? Because I'm not going to buy anything. But if I know I'm going to go buy something, I'm going to reduce those cards. Inquiry removal, right? If you've got 15 inquiries, doesn't really matter that much on the personal side, but when it comes to business funding, it does. Because if a lender is looking at that profile and they want to loan you some money, but you went to 15 other people and all those people said no, red flag. Okay, and so that's where credit repair comes. They tell you to remove those inquiries or wait 2 years or stop inquiring across the board. Or there's ways now to where they even look at where the lender is pulling from, and they're very strategic in how you pull and how you request money based on what bureau the lenders are using. It's a whole strategy. Information cleanup. That's another easy one to approach that you can even do at home, right? So information cleanup, all this stuff you can really do DIY, do it yourself, put it in ChatGPT, tell it to create you a letter and send it to the bureaus. But if you were like me, when I first looked at my profile, when I realized how important this was, and I pulled my full credit profile, y'all, I had 30 past addresses, okay, because I've been living on my own since 17, had roommates, so every year it's another place, okay. All them addresses followed me. I had all my past entrepreneurial jobs, the cleaning company, this company, that company, all on my credit profile, all these prior addresses. When lenders look at that, it's a red flag. Okay, business profile lenders, when they look at that. So one of the things you want to do right away is clean all that information up. All that has to show is your current address, prior address, one job, very clean, one thing across the board, so it doesn't look like how mine looked. When I said I had like 30 addresses, I was like, oh my God. Okay. All right. So information cleanup, and then consolidating debt to installment loans versus revolving loans. So on a more high level, if you're one of those, on the personal side, you've got, and I see it all the time, $100,000 worth of credit charges, and it's dragging down your score. You're not going to get approved for any business funding with that amount of debt and that amount of that lower score. What they do is they consolidate debt to an installment loan that doesn't show up on your credit. Okay, and in that way, that debt is pulled off of your credit profile. Your score shoots up. Now you're back in the sevens, and you're not showing all that debt carried on your credit report. Okay, so just another strategy that these lenders will use, these credit repair companies will use, these business funding people will use in order to get you cleaned up and in a prime position in order to now go out and secure business funding. Does that make sense? So there's a strategy, there's a way to do it, there's a system. If you come in and you've done half of it and you don't need all this stuff, right, or you don't need it, now you're in a better position to go get business funding. Okay, your profile is clean, you've only got one thing or two things, that's a better position for business funding. But if you know you've got stuff, because life happens, especially in real estate, especially in a lot of, just in the world right now, if life happened 2 years ago and you've got a bunch of lates or you got a bunch of things or you've got stuff going on, now you know what might be holding you back from business funding and what you need to approach prior to going towards business funding. Okay, all right. There's also 6 other foundational steps to business funding. I love this part because this is the part that we as business owners, we know probably 75% of it. But then there's 1 or 2 key pieces missing that might be stopping you from funding. And then once you know that, now you can go get the funding you need. Okay, so I love this part. First part is get your EIN number. Okay, if you're a real estate professional or whatever professional, and it's a business for you and you're making that income, okay, you want to first set yourself up as a LLC or a corp. That's actually what I have as number 2. So they're interchangeable. You want to set yourself up as an LLC or a corp, right? I'm an S corp. I run as a KRG consulting group as an S corp, right? Why? Because in real estate, I want to save on taxes, a whole bunch of different benefits and values, right? But then that way, established for a while, get your EIN number. You should know that number like your social, because that's what you're going to be using to apply for everything. Right? It's free. It takes less than 5 minutes and it's on the IRS website. Okay. Do not pay someone anything, a dime, to do this because it's free. Okay. They'll tell you that it costs and all that. Form a legal entity, LLC or S corp, so you can separate your personal and your business liability. Not just your liability, the funds, everything's separated. That's what lenders are looking for. If you're not set up this way, don't even think about trying to get traditional business funding. Okay. If you're not set up with all these pieces in place, because that's what's going to hold you back. Get a DUNS number. It's from Dun & Bradstreet, which is online. Look it up. You're going to get a number and you're going to get an account with them. Okay, because that's how you're going to track your activity, your PAYDEX score. Okay, you don't have to get the high paid account. You don't have to just get the basic account that you can set up that's going to have your EIN, your entity, all your information in there. So now when people go online, vendors go online to search you, you're legit, you're online. Okay, it's from Dun & Bradstreet. It is required by most vendors. Open an account. Here's another key point that, oh my God, when I learned this, it changed the game for me. It really changed the game for me. There's a NAICS number, NAICS number. A NAICS number is what we call it. And you have to choose your NAICS number with your business, and you need to choose it responsibly. Also, while I'm on that note, your business name, you have to choose responsibly. I will give you a prime example. My company used to be called KRG Financial Group. Okay, my NAICS number was as a real estate broker because I ran a real estate brokerage. Okay, that's why I wasn't getting business funding. Okay, because real estate is a high-risk industry. Vendors don't like it. They don't like real estate. They don't like credit repair. They don't like property management. They don't like those industries whatsoever. And so if a lender knows you're in a high-risk industry, you're automatically X'd out. You're automatically X'd out. Okay, my business is now called KRG Consulting Group, which that consulting might be burned out too. Okay. Would have been better if I went with Marisa Fletcher Inc., where they can't tell what I do, right? And then I can say I teach or I do education or I do that's my main thing that I do. Not real estate, but I'm educating, which I am. I'm educating buyers and sellers and investors on, their assets and how to acquire more, right? Be in position that way, going to borrow funding is better than being positioned as a real estate agent or a real estate, a real estate shop, if that makes sense. So choose your name wisely, right? I've had this corporation for 2 decades now. Things were this way here, but had I chosen differently, now my goals are entirely different. And now I can use this corp for something else, right? Not just as a real estate umbrella. So choose that wisely and choose your NAICS number wisely, because lenders look at that. And if it's any one of the high risk categories, you're not going to get, it's going to go against you unless everything else is perfect. It's going to sting you. All right. Open a business bank account using your EIN number, a business banking account, not so from a business bank, right? Open a business bank. What are some of the good bets? Banner and Citizens and some of those guys. I'm not real big on the B of A's. Well, nothing personal, but business banking account, and you want to use your EIN, and you can never commingle because when they look at those bank statements, they always ask for bank statements, guys. When they look at those bank statements, they're looking at those bank statements. Okay, so they can work for or against you. In our industry, real estate, it really helps us when all this stuff is set up, and then we have those really high income producing months, and now you're going to try to get business funding so you can stabilize your cash flow when it's not so high producing. It works real well for us if we have everything set up the right way because they see the cash that goes through our bank accounts. Okay, but they're going to want it to be a business account and it's tied to an EIN number. Okay, then what you want to do is you want to start with your net 30 vendors. You probably heard this before, but it's true. This works. Start with your net 30 vendors. Uline, Granger, and Quill. Used to be Staples and Office Max. They don't do it anymore. But Uline, Granger, and Quill, I still have a Uline account, okay? Why those accounts? Because they report to DMB. You want the ones that are going to report to the bureaus so that you can start to build your Paydex score. Okay, so now when you go into the lenders, they're pulling your Paydex score like they do on our personal score, okay? And Paydex is going to be based on how fast you pay something back. That's how they rate. That's how they rate it. So the ideal thing you want to do is like when I order my paper, or whatever, instead of using Staples, I can use Uline because I have an account with them. I'm going to order my $80 case of paper and I'm going to pay them back in 4 days. Okay, or whatever, because if I pay them under 15 days, my score is higher. If I pay them between 15 and 30 days, it's a little bit lower. If I pay them outside of 30, now we in the red zone because it's a net 30 account. Does that make sense? So just like on your personal credit, right? You got to pay it back within a certain time frame. The sooner the better, but that is how you build your Paydex score. The closer to 100, the less risk you are as a business, the more likely you are to get the money. Okay, those 3 accounts equal a Paydex foundation. So you got to start with at least 3. Start with 3. Use the ones that are going to get you some. It used to be Home Depot. I don't know if they still do it anymore because they change over time. Okay, which ones you can get the net 30 accounts for under your business and with your business information. And then you get to graduate to business credit cards. Okay, so after you're using those for a quarter or two, using those, building up that Paydex score, now you got a profile. Now you created status for your business. Now you get to graduate and you get to go for the Amex, the Chase Inc., the Capital One Sparks. Okay, the ones that don't make you do a personal guarantee. Again, it changes throughout the time because now I think Sparks makes you do a guarantee, but Amex and Chase Inc. are still good. They don't make you do a personal guarantee. You give them an EIN number. They do it against your business. They look up your Paydex score, and now you're starting to establish credit with these vendors. Why these vendors? Because Amex is really good. Once you have established great history with them, they're going to give you a lot of money. Okay? If you have Amex on your personal side, it's going to help with you on your business side. Okay, they're real easy to work with if you play the credit game, and they keep increasing limit. So that's where you start, and they have these zero down business accounts with zero interest for 18 months or 2 years. Okay, giving you $50,000 with zero down for a certain period of time, 50 and up, things like of that nature. Okay. So this is how I started, where I started to get cash flow for my business, small businesses, and how a lot of businesses build to get to this level. And then they just keep going and going and going from there. Okay, so 6 essential steps. Any one of these pieces are broken, you're not looked at as a business by these vendors. And that's what's missing when you're going to apply for stuff. Okay? All right, so separation is protection. I always like to talk about this part. Why is it important to get business credit, and what's the difference? Like who cares? Well, 43% of small businesses experience fraud in 2024. Guys, if you haven't already dealt with the emails, the hacks, just being in real estate and all the ways they try to hack us because they think we're rich, 43% of small businesses experience fraud in 2024, right? 125,000 was the average loss when business and personal credit were mixed. A lot of money. They just have more access to you. And then 0 of that personal credit would have been impacted if it were on a business only account. Okay, it would not affect your business credit. That's the difference. It doesn't affect your business credit. The money you use on those cards don't affect your personal utilization on your business, on your personal side. If it's only tied to the business, it's tied to the business. It's not affecting your utilization, okay? And same thing when it comes to fraud and stuff. So key benefits of business separation. Business default does not destroy your personal FICO, okay? Should something go wrong, something happen within the first 2 years, first 5 years, you decide this business is not for me, it's not gonna work. Those are two separate entities. You can access higher credit limits without touching your personal utilization. So, and it's higher when it's on the business side. Qualify for larger business loans, leases, and vendor terms. And really important, because we sold our Remax business, right? We had a sellable asset. Your business credit transfers with the business. Okay, so those are some key factors as to why business credit is important and why you should separate yourself if you haven't already done so. Here are ways to protect yourself. Identity theft is huge. It's on the rise. This presentation was geared around what am I seeing the most of in this business? What are the questions that are coming to me? The biggest thing is identity theft, right? Once you have a business name and you're a business owner, there's so many ways that the crooks can tap into you and get to you. So ways to protect yourself: do a credit freeze on your personal credit. All 3 bureaus, it's free, right? If you haven't heard of it before, Google it and look it up, but you should have a freeze on your credit. So every time somebody wants to run something, you got to unfreeze that credit in order for them to do so, okay? And if you've ever been the victim of identity theft, I have. It was years ago, but I have, and I'm still experiencing the results. You'll know why you want to put some of these things in effect. You don't want to become a victim if you haven't before. It's crazy to get out of. And there's also fraud alerts that you can set up against your accounts. So again, it's just another third-party verification, another step to verifying before any mortgages are done or anything is done against your name. All this stuff is free, okay? There's also credit monitoring apps that are out there. Identity IQ is a really good one. If you've ever been a victim of identity theft, you want to get on a credit monitoring app, because stuff is going to come back years later where people have that information. It's on the black web now, and they're selling it, and they're just doing all this crazy stuff with it. So you got good credit, you want to keep that credit good, but you've been a victim of identity theft, I highly recommend that you monitor it, just like you monitor your bank account and everything else. And then there's also business bureau freezes. So you can go to DMB, Experian, and Equifax Business and freeze your businesses so that criminals and crooks can't take a hold of your business credit and take advantage of that business credit as well. So those are 4 tools that you can use to protect yourself, protect your assets that you've been building over the years. All right. Now, I want to share a couple of secrets. They're not really secrets out there, but I want to share, again, the questions that I get all the time that come up, and I want to tell you guys what it is and what the reality. And there's only 3, right? Most business credit applications, guys, are going to require a personal guarantee. It doesn't mean that it reports to your personal credit report. It just means that they check your personal credit first, okay? Just because you have a personal guarantee, again, doesn't mean that it's tied to your personal and it reports on your personal side. They're just looking at you, and they're judging you before they even give you a business credit, okay? A lot of times I have business owners that once they hear personal guarantee, they're like, nope, I'm not doing it. But guys, 98% of the time, that's what it is. Okay, unless you're a $3 million business, or you're like, one of these big business, you're small like me and most of us realtors, you're going to have to do a personal guarantee. Okay, that doesn't mean you can't build business credit. Okay, but it's something you're going to have to do. So don't listen to YouTube tell you that you can get money without a personal guarantee. It's almost 100% not true. In fact, if you go to major banks' websites, I think I have B of A up here. Yeah, B of A and US Bank Triple Rewards Visa card. Just go to the websites and take a look at them. They're going to say it's based on credit approvals. Okay, this is what they look for. These are some of the things that they look for. If anyone tells you otherwise, they're lying to you and they're trying to sell you something, which is what they do on YouTube all the time. Okay, so personal guarantee expected. It is okay, but that's why you got to build that personal side. Secret number 2, your business revenue can be a projection. So when we're applying for these cards and applying for the business credit, when we get to that point, your business revenue in our industry can be a projection. It has to be realistic, but it can be a projection. Okay, on the application for business funding, it is completely legal to put a projected revenue of up to $500. It depends on how it's worded and how it's questioned. More than that, they're going to ask for documentation, and really that's kind of high. If you're nowhere near that projected revenue, right? We know we're going to have a couple good years coming up. So I can talk about my projected revenue versus my revenue of the last 24 months. Okay. So that's secret number 2. Secret number 3. In order to get business funding, it is easier and it is more likely to happen if you have an existing relationship with the bank that you're applying for. Okay? If you have a connection inside of the bank, that's even better. Okay? Because they'll help you with the applications, tell you which one you would get approved for and which ones you won't. Okay? And you'll want to open some accounts before attempting others. So before you think you're going to open the Chase Inc. card with the $50,000 or $75,000 limit, you should probably have a Chase Bank account or one of the other Chase card products that they have, or at least a basic relationship with the Chase business rep. If you have that now and you have your profile, now you're going inside the bank and you're going to that person. That it's a relationship game. You're going to that person. They're filling out the application for you, helping you fill it out. They know what to put. They know what the data points that the banks are looking for, and then that's how you get approved for business funding. So for those of us that have long relationships with whatever bank it is, ask them what products they have on the business side. Do they have any 0% funding cards? A lot of times they do. US Bank does. Banner Bank does, right? I know that because I'm with Banner Bank, but both of those banks I know for a fact they do. And because you have a personal relationship or you've already established a bank account with them, right, and been with them for however long, that's going to help you. Or if you know you're going to apply for Chase, go open up an account and apply for Chase 90 days later, 6 months later. Don't go in there out the blue and just start applying for those Chase unless everything else is perfect and looks ideal. The easier way, the better way to guarantee you get business funding is with existing relationships. I've got relationship with Business Bank, California Bank and Trust. I got a business bank builder over there. If I met those data points and I wanted one of their products, I would talk to her and say, hey, Eni, what do I do in order to get this product? I want to apply for this card. What would I do to get this product? I'm going to go talk to her first. I'm not just going to go to California Bank and try to apply on my own. I don't have no relationship with them. I have nothing with them, right? Eni wouldn't know the data points. They want this FICO, this. You got that? They want this. Okay, it's called data points. They all look at the data points. They change based on the market, but they look at the data points. And if you fit, it's like underwriting, like manual, like underwriting, not manual, like underwriting. You fit these points, you get the approval, you get it spit out. You don't, they got to do a manual. Okay, it's kind of the same scenario when it comes to business funding. I hope that makes sense. All right, so in wrapping up, what are some steps that you or your clients can take today? Let's say you're starting from ground zero and you want to build business credit, right? Or you were missing some components, right? You didn't know you needed the 3 net 30 accounts or whatever. What are some steps you can take today? First, you should freeze all your personal credit, right? Just as a safety measure, safety precaution. Identity theft is on the rise. It is absolutely insane. I'm not even going to begin to start telling you the numbers. It's crazy. So just freeze. If you don't have a freeze, do a freeze. It's free. You then want to go and get your free DUNS number from DNB for your business. Dun & Bradstreet, dnb.com. Okay, you don't have to do the upgraded account. Do the free account. Just get online. Get in the system, right? So when vendors go look to pull, you're there somewhere. And then go pull all your business credit reports from all 3 bureaus, the DNB, Experian, and Equifax. Go pull your business credit reports, okay? And see if you've got anything going on there. Check out the system. See if anything's been, from your past business history, okay? This month, you could form that LLC or S Corp if you haven't already. Go get that EIN number, open up a dedicated business bank account, okay? And set up at least 2 of the net 30 accounts. I would say 3, but set up all the net 30 accounts. It doesn't cost anything to set them up. It's just when you use them. And make sure you use them and pay them back within 15 days, okay? Do that for 90 days. Now go and apply for those business credit cards, right? If you've had an established business for a while, right? Because they look at everything, right? My corp has been around for 20 years. They look at that. That's an established business versus maybe somebody who's only been around 6 months. It's not good enough history. You need 2, maybe 5 years or more. They're looking at each of those data points and then figuring out where you fit in there, right? But say you had the business set up, you've got a credit profile, great credit profile. You don't need credit repair or anything like that. You've been doing good. You've been chugging along. Now start applying, set up your net 30s. Make sure everything is right. Make sure you got your EIN. Now apply for your business credit card. Okay. You can also enroll in business monitoring. That's on Dun & Bradstreet. You can enroll so you can see your Paydex score and what's happening with that score. And then as a final step, because I'm normally teaching other professionals, schedule a credit strategy session with NextStep to see what you would do going forward. But these are the basic steps. I wanted everybody to at least leave with, number one, a foundation on what they're looking for and what could be dinging us, to make sure all of those things are in the right category. You can always fix stuff. Just like I told you, I fixed my corporation. We're now KRG Consulting versus KRG Financial. I wouldn't get nothing with that. I have an NAICS number of administrative business as my NAICS number. Okay. But I changed it to put me in a better position so that I could get business funding. So once you know those things and then all those things are lined up, now you can go and pull the trigger, and now you can start, dipping your toes in and starting with some of those business funding solutions. Chase Inc. and Amex. Those are the nicest ones for business funding and the easier ones to get your foot in the door once your profile looks good. And with that, I don't have anything else to give but a thank you. Thank you, thank you, thank you. I wrapped that up in about an hour. Again, this information is like a foundational starting piece. A lot of us on the call already know. We've been in business for a while and we know a lot of these steps, but sometimes there's a step or two we don't know. I just did this for a group of realtors, a group of EXP realtors. One of my business partners hosts a training each and every week, and I just did a little snippet of this. It wasn't even all of this, and a lot of them came back and they said they didn't know about the DUNS number. It's the DUNS. So sometimes you're just missing one piece, and that one piece is what's holding you back. I had some that weren't familiar with PAYDEX, right? And didn't know about that. Now you know. So now you can go in and you can manipulate the system or play the game, right? Go get those net 30 accounts, go order your paper and whatever you would normally order from there, pay it right off like you would do to start to build it. And there you go. Now you've got a number you can work with. Now your PAYDEX is sitting at 90, and now you can go somewhere and try to get that business funding. Put you in a much stronger position. So that, my friend, sums it up. I see a hand. Hi, Stephanie.
Hey, excellent presentation. My question is it possible to add past credit that you have from your business to PAYDEX?
Past credit, that's a very good question, because actually if you pull your scores and it was something that was reporting to the bureaus, when you pull your score, you're going to have a history already. It's going to be there. You just didn't know about it.
Okay.
So it's nothing you should have to add, because if it's something that's reporting to the bureaus, it's showing up there. You have an EIN and everything, a business, a full.
Yeah. So I used to do I had a printer lease for like 3 years. And so it was just on auto payment. So I'm like, if it's not, how can I put that on there if it didn't come?
They have to be reporting to the bureaus.
Gotcha.
So that's the thing. And in order to report to the bureau, that's something that you have to pay into, just like vendors do on the personal side. Something they pay into.
Okay.
Not all not all the companies report into the bureaus.
Gotcha. Okay.
So, yeah.
And just go to PAYDEX and check it.
Yes, or go to Dun & Bradstreet, set up your account, and it links everything in through PAYDEX. It'll pull up.
Okay, perfect. Okay, awesome. Thank you.
You're welcome. Ebony.
Hello. So
Hi.
okay. So my question is this: you were saying DMV. I missed the first
DMV, Dun & Bradstreet.
Oh, DMV. Okay, DMV. Okay, Dun & Bradstreet. Okay, I have
DunandBradstreet.com.
Okay.
No worries.
I was just like, is she saying Dun or is she saying okay? So that, and then secondly, you were mentioning commingling. Well, I know that you shouldn't be commingling. So what about like when you're doing like cash apps and sales and all that stuff? How does that play into it? Like,
so is a Cash App and Zelle for your business?
Yes.
Okay, so those Cash Apps and Zelle should be going into a business account, right?
Okay.
All of the business income from whatever sources, right? Because we've got solar, I've got credit repair, and I've got real estate, right? We all have multiple businesses, but they all funnel into that corporation or that main business account under whatever that corporation name tied to that EIN. And then from there, we should really be on payroll, paying ourselves, or paying ourselves out of that account, right? Cutting checks is not the ideal way to do it. Talk to a tax professional. We should really be on payroll, because then you have so much more power on payroll. Once you set yourself on payroll as a business, now you can contribute into a SEP IRA. And, not to get all into the details, but now based on whatever income we have, 25% of that income we can put away for our retirement through our own business. So it's just another way to maximize the business. I know I went on a tangent there.
No, that's fine. No, thank you so much. I appreciate it.
Of course. Any other questions?
Anna has her hand up. Queen.
Hey, Anna.
Hey, good training. Thank you so much. Awesome.
Here.
I have a few questions. So I had got a DUNS number. I also had, I think I started a Quill and maybe Granger, but I didn't use it like you said. So should I search for everything and just see where I'm at?
I would try. I would try. I would go and log into the DUNS, search by name, because you can look up your DUNS number. So if you have one from before, and once you go into DMB, you can look it up by the corporation name and all that good stuff.
Okay.
Do a search, pull it, and then look at that history, and then go to Quill, go to those other accounts and see if they're still there. You already have it. So I would just keep working. I wouldn't reestablish it if I didn't have to. But if they're closed, then obviously I would reestablish those first 3 right away.
Okay. I'm gonna do that. Do my homework.
Cool. I'm telling y'all, it makes a difference, especially because we're in real estate, and for me, a lot of talk about myself, it's always been cash flow has been the issue. It's never been the money at the end of the year that's showing on my tax return. It's the cash flow throughout the year, and really establishing and separating out and having that business side plus what I already have on the personal side, it just really helped me get through the times, right? Okay. So that we can get back to selling houses.
I love it. Thank you.
And it's really helpful when it comes to tax. Go ahead.
I'm sorry. Where's your contact information?
I did not have any, but it's going to be in the email that's going to be provided with the slides that you're going to get.
Okay. Thank you.
You're welcome.
I have a question. I just wanted to know, and if I missed it, let me know. What are your thoughts on NAV? Do you use NAV? I've been using that to kind of watch my DUNS, just to kind of watch my experience, watch my credit.
I like the credit monitoring. Watch what's going on so you know what's happening and you know where you're at. I know at one point, most of the stuff they did on NAV was free, and then they upgraded the accounts. Are you doing an upgraded version or the free version still?
I'm doing an upgraded version to put put their information on my credit, on my business credit, and they're about to come out with something new, I think next month. Mm-hmm. Yeah, and they're going to start giving a certain amount of money, like almost a credit line where you can use a credit card, but it's going to be like a net 30. You got to pay it right back. Mm-hmm. But that's what they're doing as well. So just wanted to get your thoughts on what that looks like.
I used to use NAV. I don't really use NAV anymore. When they started upgrading those packages, I didn't want to be paying for something annually to monitor when I could get it through DMB. But it's not a bad product. And now, like you said, they're starting to offer where they're going to start reporting for you. Because that's the key. The more businesses that you have that are reporting that you're doing good business with, the higher you're raising your PAYDEX score, right? Yeah. And the closer to 100 we get, the more likely you are just to get the product that you're looking for. Was that it? Come on,
you know what? I want to share something with everyone for transparent reasons. So a couple of years ago, I did one of those e-commissions as a broker, and they put a UCC filing on my if you go to your state, your corporation, which is not good.
SOS, Secretary of State.
Yes. And it dropped my credit score for my business was like very, very high. And I went in one day, it was at like 50 or 40. I said, what the heck? So come to find out, brokers out there, if you or your agents are getting those e-commissions where you can, get the money up front, please make sure you ask them about the UCC filings. They did drop off. I just got some messages that they dropped off. So now, of course, everybody's flooding me with, I can give you a loan, but pay attention to what you do with your business because it could be a negative effect on that. And I never knew that. So I just told my agents, no one gets the e-commission anymore. So just because I don't have that kind of credit to do that kind of stuff, so business
they have
credit.
Other companies that don't hit you with UCC.
Right. Check it and see. I just want to give that, but that was it. And then you have another hand up.
Okay. And just on that note, again, on business credit, that is where they will go if you default too. So if you take out one of these personal loans and you don't pay it back, or there was some issues or challenges, they'll tag you just like on the personal side, but this is going to be on your business side. And now when you try to go and get more loans or whatever, they're going to tell you no. So it almost works like your personal credit, but it's just on your business side. Your business is its own entity, but they treat it, kind of like your personal credit too. So
and just too, it was paid off when the loan when it closed, but they still get it. But it's negative. It's not good. Not good.
Right. Okay, Miss Willis.
Hi. Hello, everybody. I just wondered, I'm just became a realtor, and I haven't even started receiving like emails from the CAREB, but Gloria sent me she forwarded the email. That's how I was able to join the meeting. So when you said that you would send an email afterwards, I'm not sure if I would receive it.
Can you do me a favor and put your name or your email in the chat? And in that way we can write it down and make sure you're on the list.
Thank you kindly.
That'll be easier because most of you guys are probably here from registering for the event, correct? And if you can't come off, or if you're not, if you don't mind letting us know, that way we make sure you get the information as well.
Okay.
So, did you have a comment or? And I'm sorry, Miss Willis, were you done as well or no? Did you have another comment?
Well, I'm pretty much done, but I wanted your contact because I want to book a consultation with you later. I'm new to real estate and to entrepreneurship, so I want to come up with a game plan on how I can get myself together for business credit.
Perfect. That is exactly what this is designed to do, because it's not as hard as we think. It's just that the information out there is not very clear.
That's what I think mine might be hard. That's why I need you. So we're just going to get this started later when we get the chance. Thank you for all that information.
It's not hard. I promise you. It's not. Stephanie.
So I heard what you said about the SIC number when you said don't do real estate. And I'm just endorsing what you said because I just went ahead and, did my little AI thing. And you know what? As broker owners, do not put real estate broker or manager, because it literally said they will flag you and you will not get funding. But what it did say is put management consulting services, because it's closer to what, if you're a broker owner, to what we're doing, managing people. We have a brokerage and stuff like that. So I just wanted to and I'm looking here, it's a low risk, which is a green light. Okay. So anyway, that's all I wanted to say.
Yep.
I'm sorry. Can you repeat what she said? Management. What? I'm sorry.
It was a management consulting service.
Yes. So the code is 8742, and it's management consulting services, which is more of a generality of having a brokerage and having management of agents and their activity. And it also says lender risk rating is a low risk.
There you go.
Is that can you change where you're at right now, or once you're where you're at,
you can change it. Okay. You can change it, because I had to change mine. I had mine as a broker, and I even had to change my corporation name, because I had financial group in my corporation. That's a red flag. They don't want no financial groups. Miss Willis.
Oh, I'm sorry. I must have forgot to put my hand down.
Okay, no worries.
I actually have a meeting to go to, but it was a pleasure speaking with you guys. Thank you guys. Have a great day. You're welcome.
And
bye.
Thank you, Stephanie, for that input, for pulling that up from chat. I love chat. Any other questions? You guys will get the slide. I mean, it's really like just those basic steps, guys. It's just doing that and then doing the activities. Once you get the card, using it. Start building that score. You might want to go to nav.com and look up where you can track that score and monitor what the score is doing. You can see if anything comes up against you, like Hama did, right? I just remember Nav used to be free, and then they upgraded it. Now it's like $20-$30 a month or something like that. And yeah. So, but they still have a free version, I think.
Yeah, they do. The paid version, if you want that on your credit for reporting. So I just pay for the reporting. Yeah.
So yeah, but that way you can track what your score is doing, monitor it. You can start building it. It doesn't take long, 6 to 12 months of activity. It's just a little bit of a process, I probably wouldn't even wait 90 days if you have like And if your account is older, you'll be fine. But like if you're just opening it today, I might wait 6 months before I go and try to do something. You know what I mean?
Okay, I did find my DUNS number. Thank
Good.
God for emails.
Good. There you go.
And can I encourage you all? So we'll get everything to you tomorrow. By tomorrow, we'll make sure that Dan sends this out. But I really encourage you, bring Marisa to your board. I mean, this is value of what we need and great information, because like she said, it's that one thing that people don't know, and it can make a huge difference in our lives. And we'll be operating at a different level. This is value. So I encourage it for you all. If there's no more questions, thank you so much, Marisa, for joining and being on. This was great information.